Good morning, students. Today we are going to start financial statements part 2. So this is last time we had done four parts. Okay, we had dealt with four adjustment: outstanding, wages, closing stock, prepaid insurance, and depreciation. Okay, today we are going to do accrued income or income receivable. So what is accrued income? It is a quite common that such income, okay, we receive, we are earning them during the current year, okay, but it is not meant actually to be received at the end of the current year. That means the income is not related to the current year. You are receiving the income in the current year, but this you have not been actually received by the end of the current year, okay. So where the treatment will be shown accrued, okay, in the trial balance it will be shown as commission received and commission earned but not received 3000. So where will the entry be shown? In the credit side of the PL account, okay, by commission you will write accrued commission 3000 and add, okay, and in the balance sheet it will be shown in the asset side, okay. Next term is unearned income or income received in advance. It may also happen, that certain income which is received in the current year, it is received in the current year, but the whole amount is not for the meant to belong for the current year. Certain income will go for what? Next year also. Like if you receive 3 months advance rent, rent received for advance till March if you receive, okay. So it will not belong. I'm sorry, if you receive till June, okay. So till March 31st, it will be in the current year, and April, May, June will go in the next year, okay. So this kind of income, if you receive, it is income received but not earned, okay. So it is something like advance. So what you are going to do with this thing? So see here, the example will be given in this manner. Rent received, it will be given in the trial balance, and down it will be written rent received but not earned 3000. So let us see, children, how we are going to adjust with this. Profit and loss account, by rent it is 39,000 less unearned rent 3000, okay. You are going to subtract it. Accrued, what did you do? Accrued we have added, okay, but here unearned rent we are subtracting, and in the balance sheet in the liability side we are showing unearned rent. Accrued we show in the asset side, and unearned we show in the liability side, okay. Next topic is interest on capital. Now interest on capital, what is capital? Is given in the sum. Capital is the initial money with which you start your business, isn't it? Now, see here, they have told you that if 6% interest is allowed on the capital, 10 lakhs, then how you are going to show it? Treatment in final accounts is interest and capital is an expense. So it will be shown in the debit side of the profit and loss account. Okay. And it is also a type of gain. Interest on capital is a gain for whom? For the proprietor. So what you are going to do with the capital, you are going to add interest on capital, okay. So this is the treatment of interest and capital. And another thing which you have come across is drawings. So drawings is what? The personal expense of the proprietor or the of the business, okay. So the when the proprietor draws any cash for his personal use from the business, it will be treated as drawings. Now how are you going to treat its interest? Okay, its interest, how we are going to show? So see here, they have given you an example. Capital they have given how much? 5 lakhs, and drawings is 80,000, and they have told you to charge 3000 as interest on drawings. So see how you are going to do. Interest on drawings will be credited. It is an income, so it will be credited in the profit and loss account. And in the balance sheet, what you are going to do with the capital, you are going to first subtract interest drawings first, okay, then you are going to subtract interest on drawings. Okay, so both the things you have to ultimately subtract from capital. Okay, so it is done. So let us move to today illustration 2. Okay, so see illustration 2 in your book. It is the question is Ved Vyas prepare a trading and profit and loss account. Okay, so some I don't have to repeat. I know you have done lot of final account sum. The only thing is for the adjustment. Now adjustment is what you see. Stock is given, closing stock, you know. Then it is given depreciate fixed assets by 10%. This already we have done. How you are going to charge depreciation. This item is new. It is commission earned but not received. Amounts to rupees 400. So how you are going to deal this, you also know this. And this is rent received in advance. This also you know, advance treatment, how we are going to do. And at the end they have given you that 8% interest on capital you have to charge, and 900 will be interest on drawings. Okay, before that let us have a look at the sum. What are the points given? Okay, this is known to you: purchase, sale, return inward subtracted from sales, return outward subtracted from purchase. Okay, so you are not seeing opening stock in the sum over here. So carriage is there. Wages and salaries will go to, of course it will go to trading account. Now these items are belonging to profit and loss account. Trade expenses is there, rent is there, insurance is there, audit fees is there. Okay, debtors and creditors, asset and liability, again bills receivable, bills payable. Okay, this will go for asset and liability. Printing and advertising, this is an expense debited to profit and loss account. Commission, now see, look at here, commission is written in the, I hope it is written in the credit side. So if it is in the credit side, that means it is income, so it will be credited in the profit and loss account, credit side. Okay, opening stock is given now here down. Cash in hand and cash at bank, these all are asset. It will be shown where? In the balance sheet. Bank loan is a liability, okay, in the balance sheet. Interest on loan is an expense, so debited to profit and loss account. Capital, drawings, these all things are items of balance sheet, and fixed asset also will go in the balance sheet. Okay, so let us start with the sum. So it is, the starting of the sum is done with opening stock, you know very well. So to opening stock it is 36,000. Okay, with purchase less return outwards, and with sales less return outward, sorry, inward. Okay, closing stock you will write. Okay, and next carriage will only be there, and wages and salaries. So credit side total you will do, subtract the debit side, then you are getting gross profit 1,92,000. Okay, so both side total you have done. Now when it is gross profit CD 1,92,000, then it will be gross profit BD 1,92,000. Okay, next it is by commission. Okay, commission I told you it is interest, so in the credit side it will be written. Now what is given in the adjustment? Come to the adjustment. It is written commission earned but not received amounts to rupees 400. So this is what commission? This is accrued commission. So accrued commission, what do we do, children? We add. So by commission you will write, then you are going to write add accrued commission. So it is 1400. Okay. Next, rent. Rent received is how much? 13,000. It is in the credit side. Less it will be, see, advance. It is given one. Adjustment is given, rent received in advance 1000. So advance, you know, always we have to deduct because it doesn't belong to that current year. So 13,000 minus 1000 is 12,000. Okay, and last thing is given here, interest on drawings, how much? 900. So 900 by interest on drawings in the credit side of PL we have finished. Now come to the debit side. Debit side, you know all the expenses, indirect expenses. So it will be trade expense. Okay. Next, in insurance, audit fees, printing and advertising, interest on loan is an expense. Okay, depreciation. Depreciation they have totally calculated and given the amount over here 30,000 because it is only on fixed assets. Okay. Interest on capital is 20,000. How you have done? Now let's do this calculation. Okay. 8% interest on capital. What is the amount of capital? Look at the sum. Capital is 2,50,000. Okay. So 2,50,000 and on that 8%. So 8 by 100 of 2,50,000 if you do, then you are getting interest 20,000. Okay. And depreciation is how much on fixed assets? Depreciation is 30,000. How? 10%. And how much is the fixed assets? See here, depreciation is 10%. Amount is 3 lakhs. So 10% of 3 lakhs is how much? Of course, it will be 30,000. So your depreciation is 30,000 over here. Okay. So all you have done, now you are going to add the credit side. So that is 2,06,000. From 2,06,000, you will subtract all these expenses, indirect expenses. So you are getting net profit. What is the net profit? 1,43,900. Now, two items we have dealt here, that is accrued commission and rent received in advance. So these two items will also be treated in the balance sheet. Okay, let's see how we are going to do. Come to the balance sheet. Now see, cash in hand and cash at bank, these are both are assets. Okay. Bills receivable. Bills receivable is an asset. Debtors is also an asset. Closing stock is an asset. Okay. Next, what item is there? You are seeing accrued commission. Accrued commission is coming from where? Here. Okay. Accrued commission is how much? 400. So it will come here. Accrued commission. Okay. And fixed assets, what is the amount we just now saw? The amount of fixed asset is 3 lakhs. Okay. So 3 lakhs, and how much is the depreciation? 10% we have calculated. So 10% of 3 lakhs is 30,000. 3 lakhs minus 30,000 is 2,70,000. Okay. Now let's move to the liability side. In the liability side, what are the things? Bank loan, bills payable, and creditors. Okay. These three items you have written in the liability side. Now, rent received in advance. What is this? This is an liability. Okay. So liability, where you are going to write? In the liability side only. So rent received in advance 2,50,000. Okay. With that, rent received in advance is 1,000. Okay. Next, what we are going to do with capital? Capital is given 2,50,000. With that, this adjustment, interest on capital, you know, it is an income to the proprietor. So we are going to add 8% interest on capital and 900 interest on drawings. We are going to what? Subtract. Okay. So interest on capital 20,000 we are adding. Then we are adding net profit. So two new items you are seeing over here. With capital, interest on capital is being added. Okay. And what is being added? Net profit. This you know previously it was done. Okay. And two things are subtracted over here. What is this? Drawings and interest on drawings. How much is the drawings? Drawings is given 15,000. Okay. And interest on drawings is given 900 in your sum. So 15,900 as a whole together you are subtracting from where? 4,13,900. Okay. So your balancing is figure is coming 3,98,000. Okay. So both the sides both the sides when you see, if you add, it is coming to 4,83,300. Okay, and this one is 4,83,300. So balance sheet, your both asset and liabilities both are tallying, so it is correct. Okay, so your, if your balance sheet is correct, you come to know that your entire solution which you have done is also correct. So now again I am revising with the adjustments. Adjustments, closing stock. Closing stock, you know, two times. Once it will appear in the trading and another it will appear in the balance sheet. Okay, in the asset. Next it is depreciation. Depreciation, two times you are going to do. You are going to show it as an expense. Where you have shown two depreciation on fixed assets in the profit and loss debit side, and another depreciation where you are showing from fixed assets you are subtracting depreciation. Okay, so this is the matter of depreciation. Next you have commission earned but not received, it is 400. So what you are going to do, this is accrued commission. Accrued commission generally is an asset, so it will be shown in the asset side, accrued commission 400, and in where you are writing commission, with that you are going to add accrued commission 400. Okay, this is clear. Next comes your last thing, rent received in advance. Advance means you are receiving something of the next year. So next year things when you are receiving in the current year, what happens? You have to subtract that amount. So what you are going to do here? See, with rent received in advance, this 1000 rupees doesn't belong to the current year, so we are going to subtract it. Okay, so 1000 is subtracted. Next, where will you show? It is when it is subtracted, so it will be a liability. So in rent received in advance will be shown again here in the balance sheet in the liability side. Okay, and the last item is interest on capital and interest on drawings. Two items are there. Interest capital is given how much in the sum? Interest on drawings, here the figure is given 900. If they tell you any percentage, okay, so suppose they tell you 5% or 10%, then you have to calculate interest on drawings on that particular amount, 15,000, 10% or 5%. Okay, but now we are going to calculate interest on capital. How much is the capital? 2,50,000. Okay, capital amount is 2,50,000. On that you are going to charge 8% interest. So 8% of 2,50,000, it comes to 20,000. Okay, so interest on capital will be shown in two places. What are the two places? Interest on capital is shown in the profit and loss account debit side, to interest on capital 20,000. Okay, and interest on capital will be added to capital. So capital, with the capital, two things are being added. First is interest on capital 20,000. Next it is the net profit which we have calculated, 1,43,900. Okay, two items are being added to capital. Okay, done. And two items are subtracted. What are these two items? One is drawings, another one is interest on drawings. So one interest on drawings you are subtracting here, and the another interest on drawings, what you are doing, children? You are writing by interest on drawings, it is your income, so it is being credited in the credit side of the profit and loss account. Okay, so I have repeated with all the adjustments. I hope you have understood illustration 2 of your book nicely. So keep practicing. Okay, keep practicing and then you can come to know. So here we are ending with our thing. Okay, so I hope it is clear. Nothing more to say. Any doubts and queries you can ask. So we are ending our class over here. Thank you for watching.